happen in oil next year. And eventually it will go much higher. And you have to read my commodity article I wrote in Seeking Out Coverage. Maybe they censored that. I didn't mention any politician.
Yeah.
So, but,
Why do you say it'll go much higher?
well, I've written it, the demand actually keeps increasing at incredible rates. The supply is actually plateaued. So, you can't just produce more and more and more oil. You have to have some mechanism for doing it. And there's no new big discoveries like there were in the 60s and 70s. What created the big glut in the 80s is North Sea oil came online, Alaska oil came online, Gulf of Mexico oil came on. These are massive, massive fields that produce huge amounts of oil. What the Saudis did this time, they had a field of oil that was contaminated with vanadium, which makes it, vanadium the mineral, which makes it toxic. So they had to build a plant to get rid of the vanadium from the oil. Now this required technology, and it's very expensive to do this. Plus they had to create a huge infrastructure of bridges, roads, tanks, and a whole bunch of others that cost billions of dollars. So you don't do this in one day. This took years and years and years to get this done. And it's not cheap oil because you always have to process the vanadium. So that's one amount of oil. Another field was something that stopped producing in 1980, and how they managed to get oil out of it, they pump water from the Persian Gulf. But first they have to desalinate that water, which requires lots of energy. And they have to pump it 60, 80 miles into the desert, and they put millions of gallons every day into this field to get oil to come up. So now you can't increase the supply constantly. There's a limit. They've reached that limit. They've reached the limit of the vanadium. And there's one other big field they brought online that is in the middle of nowhere or something, that has some other serious problem. So that's it. You can't just, and oil, you go up like this and then you go down like that. So when you peak, you actually are facing a drop. So they're going to have less supply. And this is also happening in their neighbors. So the supply is actually going to go down, but demand has only decreased in oil 3 years since 1859. 3 years in 160 years. So it always goes, even in recessions it's going. So I mean, the supply-demand is at a critical point. So you can actually get this explosive movement, and maybe next year to follow, a big move up, not a $5, back to 100. So what is this? So oil, I'm waiting for it to break down, and they're willing to make a deal because Russia can't produce it, the can't produce it. So they say, oh, let's put a ceiling. Oh, won't produce anything. Well, they can't produce it anymore. So what do they lose? It's like people say you can't trust them. Well, you can, but they can't do anything. So oil, this is this chart. And David was correct. The oil chart actually was not nearly as bullish as the gold chart. We've now got this 50-day line to cross the 325-day. We call this the double golden cross. This is the first sign of a long, sustainable round. It's finally happened in the last week or so. So we then need this blue line to cross that red line, and then that will be a rally that can last months and months and months and months and months. So we are waiting for that to happen. So oil's getting a little more bullish, and it's really basing. It's in this long basing period, which means sideways movement. So natural gas this was a breakout, then it suddenly just broke down. So we'll wait to see what happens. Notice it hit this is major support with this 200-day moving averages joining the 325. It went right down to that point. So as long as it stays above that, it's actually still in an uptrend. That is not in the uptrend, but maybe it will go up. We'll have to see. This is bearish. This is sort of okay-ish, and this is weird. This is technically a sell-signal. There are precious metals. Silver is doing better right now. Gold did better at first. Palladium is this blue line. Platinum is the laggard in the entire industry. Here's gold. Notice here's the 200-day moving average. Notice the price right along it. And there's all precious metal. The whole sector. You see this chart. It hit this 200-day, and it's just riding it. And here, this looks like a bottom was made here. This is a sell signal, but if it turns down, it's weakening. You see gold miners have the same picture. You see silver. Silver is not riding along that, it's riding above the line, which is actually a little more bullish. But that line is the key marker of where the price is. So let's look at bonds. I have something very obvious has happened, which David needs to know too. It looks like interest rates bottom throughout the world this July. There is a low in market after market after market after market in government bonds, not corporate bonds, not high. And you see this same low pattern. This is July. Interest rates hit a low, and then they started rising. This is the 30-year Treasury. The interest rates are bullish. They move in the opposite direction of the price of bonds. Remember that. So this looks like interest rates want to go higher, and the higher point would be this red line for the moment. 10-year has the same picture. You see the same bottom in July. It's going above the 200-day, which for the moment is bullish. You still need this gold line to cross this first. This is bullish, bullish, bullish. So here's the 10-year German bond. It's moved above zero. It was negative for quite a while. It also hit a bottom in July. And now it's going above zero. It's been unable to stay below zero, which of course, that does make sense. Let's think that one through. Here's the 10-year Japanese bond, which is still below zero, but it hit a bottom in July. So, and it got to zero, and then it fell down, and now it's like riding just below zero. Negative interest rates, as I said 1 million times, are theoretically impossible. They cannot exist, but they have. And that indicates that the market is so destroyed and skewed, the market mechanisms that correct things by central bank pumps. So, but we see this bottom is happening everywhere in the world, and the Japanese bond is going to have to go above zero, too. High yield junk, this is a whole different, these are corporate bonds, and these are prices, these are not yields, so these are the opposite. So this is what caused, if you look at the left side of the chart, that big drop caused the stock market drop early in the year. And now they're high, and they notice something very weird about this chart. This is trendless. This is like, not really bullish, but look at the RSI. Notice it just rides this certain level around 65-ish. Usually RSI goes up to 80, it goes down, or it goes there. It goes up and down a lot. It doesn't go like sideways like this for a long, long period of time. This is a very unusual pattern. It indicates like continual buying of a certain amount by a very big player. Can we say Federal Reserve? It'd have to be a central bank, or it can't be like a bank. This market is being highly manipulated, and that's like some statistical proof of manipulation. In the bonds, okay, well, almost
Hey Daryl, before you go on, can I ask you one question on, have you done only one, the correlation between the 10-year or 30-year Treasury note or bond versus the stock market?
Lots of people have. When the bonds tend to start selling, a price of bonds start selling off between a few months before the market starts selling off, and a year or so. And we know this low took place in the low interest rates at the peak in price. We know that happened in early July, so we're now in July, April, August, September, 4 months. So that's just about the right time where a stock market drop would start. That's a very good one. You get an A+. I used to teach I used to give students A++ and F-. They were really bad, they got an F-. Really good, they got an A+.
Congratulations.
And people in this room can tell you. So copper, David said, copper is the one commodity that's most tied to the economy of the market, the economy of the whole world, especially manufacturing economy. And that's been dead in the water for years. It's not rallying, it's just going sideways, it's slowly going down, 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 for many, many year period. And this is like, this is not good, this is a mediocre. And this is like, this is something that can't maintain a rally. It's not really selling off, it's not rallying. It's just like there, doing nothing. It's not a good indication for the state of the global economy. Coffee has started to rally. We've talked about it forever, maybe like decades. I don't know how long it's been. You know, this is extremely bullish. This blue line plus this red line, which indicates a long-term rally, has started. So that's good. This is bullish, and this is a buy signal taking place. This is trying to go to a buy signal, it actually went into a buy signal. So coffee's high, this ETF, several years ago was 80, and it's still only at 24. So one day it will go back to 80. So it's suddenly, after a long, long time, it's suddenly starting to turn bullish. Sugar is the most bullish commodity, agricultural commodity of all. And it's like, already had a big rally. This is an extremely bullish pattern. Here it's right now, it's just resting. This is a bullish. This is a buy signal, and maybe another buy signal.
Sorry.
So this can come down, keep in mind, always you can come down to this blue line, and even this red line, and you have not destroyed the uptrend. So there's a lot of room for this. And sugar is a very volatile commodity. Cotton also had a huge rally, shot up out of nowhere. These are the two big success stories, and now coffee and agriculture. Agriculture is lagging the rest of the other commodities in general. So notice it stayed at this 50-day. This blue line is close to the red line, which is a good sign. This is actually indecisive, and this whole pattern is indecisive. So it's looking to reset either up or down. And so it could reset up, and then it just keeps rising. So we have to wait to see which way it goes. Okay, that's it. Any questions? Any answers? Any comments? Okay, right. Okay, we're going to the bar if you like drunken.